Hi there, welcome to Friday's Market Commentary. And what a wild week it was for all you investors. Hope you'd fared fairly well. The good news was Friday, going into a Friday. The good news is really it was Friday going into this weekend. We had a buy, we had a rally, and after being down almost 1,000 points here in the first part of the week, over 10% of the marketplace dropping on the SPX, we started a little bit of a bounce going in Friday with almost 500-point bounce. Dow up today, 494, Nasdaq up 68, S&P's up 47. So nice rally going into it. So what we saw going into a Friday with investors not selling off was actually pretty good news for us. All right, we got support down here at 741, and we've got resistance. We're going to call it up at around 930, which is right in through areas right here. We can actually probably go a little higher, 930, maybe right up in here around 960 or so. If you want to go up to this level here, 960, maybe even 980. But a couple different areas here. If we're taking a look at our support level, really the first one here, if we've got 740 down here, would really be maybe closer to right here at 841. So we just broke that low here just on Wednesday. So you see we broke through that support Wednesday at 841, broke it, hit 741. So our first level of resistance, which is really close, is actually 841. And then above that, maybe 960, 980, right up and through this next little ridge right up and through here. So currently, you can see our MACDs are still dropping. Histograms are up just slightly today. So I'm going to say on the trend here, overall, long term, you can see we're still bearish, dropping. We just had a bounce today, which is really just a reprieve. And the overall trend is still bearish. But because we're already so low, and we've already had such a pretty good sell-off here, I'm going to go short-term bearish to neutral, thinking maybe we're ready for that bounce. So no bullish bias here. We could actually maybe even go up a couple of days, but that would be part of our neutral because we're in a downtrend. So short-term, I am bearish to neutral with support at 741 and first level resistance 841, and then above that about 960. Long term, still overall bearish. No real reason to just load up and buy everything in the stock market and be in stocks. Pretty good idea to still be in cash positions. All right, let's take a look and see what the Nasdaq looks like for us. And here's our Nasdaq, which was up 68 points. Good rally into this one, and the rally all came, by the way, the last hour. So between 9:30 and 3 p.m., which is strictly sideways, and at 3 p.m. Eastern, the market started to rally for us. So all of this really buying you see here all came with the last part of the day. So support right here where we're bounced off now at about 1295, maybe 1300, but let's just say 1295 for support. And we're going to call resistance up here around 1545, which is what we just broke through maybe on Monday of this week. We just broke that support and started to drop. So resistance 1545, support 1295. MACDs are still dropping a little bit right in through here, so maybe a little bounce coming up since we've already dropped pretty good. So we could have a small bounce. Overall, I'm going to say long-term bearish, short-term bearish to neutral. Neutral only because we're ready for a small bounce within the downtrend. Otherwise, I'm still a little bit more bearish than I am bullish short-term. All right, hope that helps. Keep an eye on news. News has a tendency to change everything. We've got a short week coming up next week. Markets close Thursday and only open half the day on Friday, so it's not going to be a very long trading week for us. So maybe a little bit of volatility if a lot of investors are gone. So if a lot of investors are gone, aren't on the trading floor, the markets could move around pretty good because you don't have heavy volume to keep it sustained in any one direction. So trade a little lightly next week, but enjoy it, and I hope things work out and enjoy your holiday. Bye-bye.